Well, hey, everyone. Welcome to another weekly live. We purposely, push the live today. Yeah, Wednesday, 5 p.m. PST. So good evening, everyone. My name is Warren Howe, as always, and today we're going to talk about an update. Right, today we're going to have an update on what's happening in our public account, what my thoughts are, and a small little short thesis on a new stock that I bought called Himax, right? Himax. But at the same time, though, you know the drill. Show a brother some love, right? Show a brother some love and smash that like button, smash that heart button, spread the algorithms. Now we are nearly going to 8,000 members, right? We got 7.9K members right now in the private Facebook group, which is awesome. This adoption is actually insane. So yeah, it'll be great to smash that like button. Click hashtag live if you're there right now, so that I know who you are, who is watching. We can actually have a great conversation. That's the purpose of these lives, right? Is for, you got questions, you can ask me anything. This live today is actually just dedicated to updating the public account, what we call Freedom Fund account, right? Public portfolio. And also a little thesis on Himax, right? Which is a fabulous semiconductor play. Yeah, so again, if you're watching this live right now, click hashtag live. If you're watching replay, yeah, we appreciate it if you can click hashtag replay so that we can actually spread the algorithms. Yeah, so without further ado, let me update the account. So again, just to repeat in case you guys missed it, in case a little refresh, is that I purposely, put in my own money. We started this account of 3,000 USD. The purpose of this is to actually show everyone that, hey, we can make it, right? We are taking care of the little guys. Without, even with small capital, we can make money. We can even build a long-term portfolio from scratch. Now, I revealed the portfolio blueprint. I revealed what's the strategy. I revealed what's, what should we do along the way, and what am I going to do with this account. I revealed what the type of stocks that I'm going to buy. I'm going to look into momentum. Now it's going to be subjective into 50-50. That means 50 momentum or 50 thematic plays, right? Thematic plays. It could even have a little mix of trading, technical analysis for revolving cash flows, right? I don't want to marry a stock. 50% of this portfolio, because it's just 3,000 USD. I don't want to be marrying, long-term stocks, maybe just for 50%, but the other 50% will be on long-term growth strategies, right? It's disruptive potential. And the point is to actually, to build a long-term portfolio, right? So the purpose is that, short-term gains going to long-term, right? Just a repeat of that. So right now we are at 3.67%. Now, if I go to the portfolio and I go to positions recently, and in fact, it was just yesterday, nighttime, my time. I just bought into this new stock called Himax Technologies. Now, the bad thing is that this is an ADR stock, American Depository stock. That means it's because it's actually a Taiwanese company, right? So I'm going to talk about that a little bit. But yeah, my positions are still the same. I did not add on SoFi. I did not add on Tesla, which I think I should. Now, so I just want to talk a little bit about this portfolio, right? 3,000 in relative to my net worth is actually, quite little, right? But my point is, I have to think like this is probably 30% of my net worth. Does that make sense? So, or maybe even 50%, because some people they might not have that luxury. They're still working, or they're young. They just started into the game. So I have to think differently, because why am I saying that is because I can afford to say, okay, you know what, I'm going 70% on Tesla, which means I can own 3 shares, and that will be 2,000 or even 90%, whatever you want to call it, right? I can own 2007 worth, which is 3 shares of Tesla. I can buy that. And sometimes, seriously, sometimes, and there's no right or wrong when it comes to portfolio allocation, but sometimes we can be that, right? So that's why I want to touch on this a little bit. Like I want to touch on portfolio allocation. I want to touch on, especially with this market times right now, or any market times, any condition, right? Um, what I want to say is that if you have a stable job, if your monthly cash inflows are strong, and if you have the you know the ability to be keep on providing value to other people and yourself, then you're not afraid of getting replaced from your job or whatnot. That means it's stable. Then you could focus on focused investing. Does that make sense? Focused investing, that means that we can seriously, to make money in the markets, all we need are 3 to 5 stocks, right? Now, I'm yet to be decided because I want to see how the market is along the way, but I did reveal how much I'm going to put into this account, right? So that's all I'm saying. I bought one share of Tesla because that is already 30% of 3K, right? So why am I revealing? I don't want to buy fractional shares. I want to buy, legit, just buy straight up shares. And I could buy 3, and I could wait for my paycheck or next month to be putting in. But the reason why I'm actually doing this is because obviously I want to show everyone that, okay, like everyone that's having a smaller portfolio, they can have 3 stocks, they can have 5 stocks, right? So yeah, I want to balance that out. I want to diversify because honestly, my highest conviction stock is Tesla. My highest conviction. They have flywheel momentum. They have proven it already, right? 2022, in my opinion, is Tesla's year. Now, again, guys, this purpose is to actually show my thought process, allocation. How do we segregate, what is my thought process on focus investing or diversification, 50-50 or 30-70, short-term, long-term. I'll be sharing thesis. Now, I'm not your financial advisor, right? I'm not a financial advisor. So please do not copy me, right? Please do not copy these trades. The most important thing is that we need to be in position of power, right? And I don't mind repeating this again and again because seriously, this is what we need to strive for. We need to be in position of power where when the markets are going down, we are building thesis, right? When the markets are going down, we are building up our cash positions. That, guys, is position of power. So that's what we constantly want to be. So yeah, I'm doing just that. I'll be putting in 500 USD next year, which is January, right? Or 300, whatever it is, right? Depending on my own cash flow. Okay. This project is for you guys. But yeah, this is what I'm going to do. So currently the allocation is, well, it went up a little bit, right? Because the market's actually sort of going up a little bit. Oh yeah, and I want to show a little bit on the sort of the functions of IBKR. This is why I love IBKR. So what I have here is portfolio analyst, and there's 2 accounts, right? As you guys already know, that's my public account for my Malaysian side, and this is for Financial Fortress. Now, I do not want to look at this. Let's look at this. Yeah, so this function is actually what we can track down as year-to-date TWR performance, right? Time-weighted returns. Now, time-weighted return means that what are your real core returns in terms of, they don't factor in the money that you deposited, right? What are your returns from the investments itself? So right now we just started off, right? Okay, we're off to a little good start, but the reason why I want to show this is because I like this function. I like IBKR. This is the reason why I open IBKR, because we can actually have benchmarks, right? We can put ARK Invest, we can put SPX, you can add on, NASDAQ, just to compare your returns. So, along the way, hopefully this ages well, hopefully my investments age well, then we can actually see a nice, graph comparison over the year. How did this portfolio match against the S&P? Now the S&P 500 is always very difficult to match in terms of a whole portfolio, right? Because year to date S&P is already up 20+%, which is great, right? My own personal portfolio is only up 16%. At the moment, it's like 19, right? Something like that. Tesla jumped up, whatever. So we need to constantly, compare with, benchmark with S&P 500 because we want to challenge ourselves, right? We want to challenge, hey, how do we do things better? And that's what this 30/70 is for, where we want to try to focus on thematic plays. Now I'll be revealing more commodity plays, and next week I want to be talking about my personal strategy for 2022. So do stay tuned for that, right? Do stay tuned for that. So yeah, this function is actually great. Portfolio analyst, there's portfolio checkup as to sector allocation. How heavy are we on every asset class, every sector, right? So consumer cyclicals, which is Tesla, financials and technology. Yeah, so this is actually very cool. So you can play around with that, and you can even have reports like I hope Malaysian stock platforms actually have this, because you can literally check all of your trades from day one, right? From day one. So this is great. Like I love using IPKR, right? So this is something to check out. Now, let me see who's here. Okay, so that's that. Let me see. Let's talk about Hymax now, right? Let's talk about Hymax. So why did I buy Hymax, right? Why did I allocate how was that allocated again? I was doing this yesterday. I allocated because it's a small chunk. So let me bring up my calculator. So Hymax. What I did was, so how I did was, obviously I compare with the NAV, or you can call it NLV, which is the net liquidity value. That means if you would sell everything today, you can actually get how much, right? So that, and when I bought, the NLV was 3K. So I bought worth, cost basis, average price. Yeah, it's very funny. So why don't they extend? So that my cash position right now is 730. Let me go to trades. I want to know exactly how much I bought yesterday. So I bought worth 615. So the NAV at that time was like, I don't know, let's just take 3K, right? It's very small. So it's 20% right now, right? I bought 20% worth in this account called Hymax, and the cash position is also at 20+% right now. Okay, I want to have the flexibility, right? I want to, in case I don't know what's going to happen in the markets, maybe we're going to have a Santa Claus rally, maybe we don't. So yeah. Now let's talk about Hymax a little bit. So what is Hymax? Like, what do they do, right? Hymax is actually a fabless semiconductor company. Now, what does fabless mean? Fabless basically, it's a semiconductor company that only designs and gets it out to OEMs to manufacture the chips that they design, right? With them, fabless is AMD is fabless, right? Qualcomm is fabless. So they are competing actually within this, but not directly because it's different types of chips, right? There's plenty of chips out there. So this is the benefit of fabless, right? It's sort of like Nvidia, it's AMD. These guys do not have to, they do not have huge manufacturing plants. That means that they are asset light, right? If we are expecting their balance sheet to be asset light, net cash, low debt, obviously, they will have operating leverage depending on how much R&D is spent on, their R&D on their new chips or whatever that they're actually developing. We'll expect them to be labor intensive, obviously, because that's all they need, right? Manpower to be designing and testing. The only reason why they'll have their own plan will be actually to test the semiconductors, whether or not they work. So there's a lot of things involved in design, and that's why I love American companies, right? American semicon companies, because, and this is Taiwanese, by the way, is because the designing is actually very designing of a chips, basically there's a lot of ingenuity involved, right? There's a lot of tech involved. So Malaysians, sad to say, they can't really do that. So what is Malaysia? And by the way, Malaysia Tech Hub is actually something to look out for, right? Something to consider investing. So the semiconductor play, the catalyst for 2022 will be chip shortage, right? Um, Global chip shortage, right? And the need for that is insane right now. It's insane with everything that's focusing on. So from automotive chips, from LED chips for EVs, for that's why Micron recently they went up because of the good earnings, right? They're focusing on DRAM. So it depends on whether or not your chip has a huge moat itself, or what are you. I mean, how many players are actually doing that? But the reason why I said Malaysia actually have that benefit is because, in a nutshell, we have a sort of a small Silicon Valley hub, right? Silicon Valley hub where companies are actually close together. So they are in the whole value chain, right? There's designing chips, there's foundries which they actually manufacture them chips. Then they outsource it to OSATs or OSATs, which is outsource assembly companies that actually assemble these chips. Then obviously there are ATE, which is ATE machines that test out these chips. So there's a lot of things involved in producing one semiconductor chip, right? One small chip involves a lot of process. But do we have to understand the whole value chain? Now, I do not see. I seriously, when I want to value semiconductor companies, it will take a little bit more time for me because it's very technical, right? But I'm actually giving the whole overall outlook of the semiconductor value chain, so that we have to understand, right? We have to understand how it works. We have to understand how it benefits, and where does Himax fit into this space, right? So obviously, back to Malaysia, right? Back to Malaysian companies, they actually focus more on ATE and OSATs, right? And even EMS. But that being said, they are lacking, design, right? They are lacking design. They're lacking, technology in order to actually create the chips. Their job is just to, assemble and manufacture them chips. So yeah. And back to Himax. Himax, what they do is actually they outsource it to foundries like TSMC, one of the biggest foundry in the world, which is also another Taiwanese company. And their specialty is actually to design, right? So what are they designing? What type of chips? Basically, they're focusing on. I drawn out the investor presentation here. So TDDI, right? Touch and display driver integration chips. And so what is that? When we use smartphones, we use tablets, your dashboard or your screen in your car, right? You see that here, automotive. We need TDDI. Now, the sexy thing about TDDI, and I got this page up right here, is that they are controlling, I read this somewhere, 40 to 60% market share of TDDI. And that is non-iOS smartphone. So I read this along the holidays, and I got intrigued. I got pitched by my team in Malaysia. That guy is a semiconductor. He looks at tech plays, and so I'm trying to find that out. Himax has more than 60% global share in the non-iOS tablet TDDI market. Q4 sales of tablet TDDI to be up low teens, a continuation from the solid high base. Now, why am I showing you guys this? Is because 60% global market share is insane. Non-iOS, right? Who cares about iOS, right? I mean, iOS, they probably have their own suppliers, but non-iOS is actually the bigger chunk. Now 60% is insane. So the question that immediately comes to mind is that what potential growth will there be? I mean, 60% is already a lot, right? So what further is there further growth? That's a good question. Now the further growth obviously will be number one, we have to consider who are the other players, right? Who's actually capturing for the other 40%. Now, with them ramping up capacity, with them going into, I mean, they're already serving this, right? With more phones coming out, I would say 60% global market share, as long as they are improving within their own market, right? Within, Oppo, Vivo, their own clients, right? Xiaomi, Huawei, whatever it is, they are already contracted to be, that. I mean, they design the chips. All they have to is to OEM, to foundries, and okay, you know what? Supply to Oppo, supply to Xiaomi, supply to Huawei, right? So I'm not really afraid of growth prospects in this space because they are already, known, right? They already have that brand loyalty. So, and we can read some more, right? I don't think I can cover a lot today, but this is actually from the investor presentation, and this is the majority chunk of their revenues, right? Tddi. But the growth story about this, right? The growth catalyst, in my opinion, is actually more to automotives, right? Now, automotives is where they are actually a little light. 60% is, just on the non-iOS tablet. But we got smartphones, we got automotive, and automotive is actually so think of it this way, like Lucid or any other new company, EV company, they require more touch panels, right? Even my Volkswagen, my Tiguan, they they have touch panels, right? So my point is more cars, right? More cars that are actually going to new design, which is 3D sensing, touch panels and whatnot, equals more business for Himax. So it's actually quite a big TAM that it can capture, and the growth story is actually touching more onto that, which is smart sensing. They also cover IoT, right? But more into touch panels. So this is the reason why I invested, and the sexier reason why I invested actually is the revenue growth from 2020 to 2021, and the PE is just 6 right now. 5 or 6, right? So if you have heard of Himax, leave a comment below. Type Himax if you have. If you're invested in semiconductor companies, type Semicon. I want to know who you guys, what you guys are investing right now, and what do you guys think about semiconductor itself? Don't just listen to me. We want to interact on what you guys are investing. Are you investing in chips, or what is your thesis on shortage of chips following 2022? And this is part of my strategy that I'll reveal next week, is that I'll be focusing more on semiconductor side on the for Malaysian companies, right? Well, not really semiconductor is in Malaysia, but more the tech industry for sure. But I'm actually digging more into, maybe I should own some AMD, maybe I should own some Nvidia, right? I personally don't have that. But I think the semiconductor play will be very interesting following coming 2022, right? So yeah, this is something to look at. Semiconductor plays, commodity plays. This is what I'll be revealing next week. But yeah, these are the plays that I'm personally looking at, right? So recognized industry leader for the last 30 years. So this is an old company, right? They've been listed for quite a while. Now it's not a huge, exciting growth story. I simply bought them because it's a value play, or value/mid growth play, that I might even treat as a trading position, right? So I see, seriously, it's 5 to 6 PE. Now, there's something that I want to talk about as well. There's a reason why companies will have 50 PE. Like, let's say for Malaysian companies, there's a reason why tech industry is 30 to 50 PE. That's because there's nothing exciting in Malaysia, right? There's no Snapchat, there's no Instagram, there's no Facebook, there's no SoFi. So that's money flow. Locals, they love tech companies. That being said, though, there is a risk of Himax being a value trap, right? So value trap meaning that if we right now it's 5 to 6 PE, like, why won't funds be buying them? Why won't institutions be buying them? Because right now they are, their shareholder type, you can see only institutional on like 8.9%, right? Retail is at 50%. So this is risky in a way. So, insiders only 24%. So why am I showing this is because this might be what we call a value trap, right? Value traps are when, companies are, they are not getting love from the market. They do not deserve a higher premium. That is where they won't get some love, right? But when we compare their competitors, like fabless competitors like AMD or Qualcomm, they actually have, PE of 22, PE of 19, PE of 24, right? So I won't say that, hey, they deserve a PE of 24 simply because they are like their peers, right? And obviously, there's a lot of technical reasons to understand about semiconductors, whether or not they are easily replaceable, or is there like a new tech coming out? But they're fabulous. I mean, they're fabulous. They're actually designing chips. I would. I mean, if AMD wanted to go on to into grab some into this space and capture market share, they probably could, right? That's the thing about them. But they've been around the block for very long. They are like huge value play. I might not even get 100% in 2 years, to be frank. Their performance actually run up a lot, but like their margins are great. They're already profitable. Obviously, that's why it's P5. In my opinion, they're actually relatively cheap when we look at their market cap. So let's check out the market cap again. Himax. So Himax market cap is only at 2B right now, P of 6, right? Now I don't immediately jump into PEs and whatnot. I obviously I look at they're giving dividends, 2%. So I don't immediately jump into financials. I look at the qualitative first, but I don't have enough time to share everything. So this is why these are the snippets on what are the reasons why I bought this share. Dividend payout. I don't really like dividend payout companies because I'm looking for more into growth. But there's a reason why they're giving dividends, right? They want to attract investors, and they can't afford to do that because they're already profitable. Now, the good thing is that they're actually focusing on share buybacks, right? That means they have, obviously they have faith in their own shares, faith in their own company. They have been executing buybacks as well. So, and why did I buy this? And I'll be revealing next week as well. Is that next year we have to be a little bit more selective, right? We have to be like, the high flying growth stocks, the high flying non-earning growth stocks, negative net income, negative operating cash and free cash, operating cash flows, probably even negative, free cash flows, are not exactly the companies that we should be piling heavy on, right? We have to look at the market sentiment right now. So this is going into this play is sort of in line with that strategy, because I want to be more, I don't want to be heavily dependent on high growth stocks that have no earnings, right? End of the day, they will be punished. Now, I want to be hedging a little safer. I want to have, a little dab on growth, but at the same time, and dab on value. So this is why I call it a value to mid growth play, right? They're already earning money. They're actually in a space that's growing, right? So, tablets, touch displays are growing. Automotive is growing. I love that growth story. They're also going into, they're actually beneficiary of metaverse because they're actually producing chips for AR, VR, right? Equipment. They previously designed chips for Google Glass, which is a failed project, but it's not their fault, right? It's more on market adoption. It's more on consumer. It's not adopt. It's all about timing in a way. So right now, I think that is the perfect time to grab on these type of metaverse stocks, although it'll take 3 to 5 years. But the winner of the game will eventually be them, because their job is just to supply. And they are asset light, right? They do not have any commitments. They're net cash. So these are the companies, in my opinion, that I'll be going. So check out our revenues. Their revenues, 420M, year on year, 75%. This is insane. Quarter over quarter is 15%. Now, obviously, we don't want to just look at 1 year. We want to look at 3 years and 4 years beyond. And I looked at that over the holidays, which is here in the recent quarter calls. But do I have that here? Yeah. We can touch base. If you guys want me to touch base on Himax more, just dedicated on that next live, just or next 2 lives, let me know, right? Let me know in the comments. I'll be happy to do that. But yeah, right. Revenue growth is proving out. Margins are insane. 22%, 51% as of 2021. Profit, okay. So revenue 79%, margins we got year on year increased by 25%. That's insane. Yeah, profits 2000%. Okay. So revenues increased 4 to 8% sequentially. Yeah, so these are good numbers, right? Fabless Semicon company, global market leader in TFT LCD. So it's a little technical, right? So it's all about digging, and it's all about whether or not they are capturing a growing TAM, which they are in this case. So Himax, what else we got? So Himax display, imaging, they got ultra low, they got touch controllers, pure cell. Yeah, they got all this, right? What else? Let's go through this. Driver ICs used to enable large markets we serve. They're also in the IoT space, which is slow. Adoption is slow, but it's a matter of time, in my opinion. So we can't, like, investing in this company. There are a couple of strategies we can adopt. We can adopt a sort of thematic play somewhat into the metaverse. We can also play into the whole semiconductor chip shortage. Now, chip shortage doesn't directly affect them because they are just fabless, but they are they are in the semiconductor space, technology space nonetheless, right? So we could actually play that as thematic. Also, we can also look at them in a long-term play, because it takes time for AR VR to materialize, and right now it's MR, right, mixed reality. So what are the devices that are actually powering that? So this can actually be a longer term play, which I think it should, because the PE ratios of 5 or 6 is insane. So yeah, this also can be a longer term play. I'm at the moment, I'm the reason why I bought at the first place is because their valuations are cheap. I'm looking into 2022. So it's more of a thematic play at the moment. Now it's 20% of a very small portfolio. So to me, it's okay, it's decent. But I can very well, follow up on quarter calls and updates to see their progress, to see their revenue growth, and I may as well just turn it into a long-term position, right? But I do not want to have too many long-term positions in this portfolio because I want revolving cash flow. So you might see me selling after, I don't know, a 20% up, right? Yeah, but I want to see how the market goes as well. Is the Santa Claus rally coming up? Or will there be weakness towards the end of the year, or following up January? I don't know. So if there's going to be weakness, I might sell on a little profit and go on to no-brainer thematic plays or commodity plays, right? It's yet to be decided. Yeah. So yeah, this is what it is. So driver market share, Novatech, Himax is a 10% market share. This is quite a lot, right, for this IC. Tddi, we already know that. 3D sensing. So every phone also there's 3D sensing. There's e-payment also, right? Smart lock, automotive access control, medical inspection service robot. Yeah, all these. So it's very, I always talk about, is there growing consumption? Is there a need for all these products, right? And this fits in, right? Product market fit is all there. They also go to IoT and power smart sensing, CIS, AI ecosystem. They're actually in the right direction, in my opinion. All it takes is time for them to actually grow revenues. Now, the beauty also is that they are already profitable. Not only that, but they are breaking out from their revenues back in, I think, 4 years ago, right? So with everything in play now, the question I always ask myself is, will the good times, is the good times coming, or are there worse times? Like, that means, are there will there be more, will the likelihood of a headwind come in, or will there be more tailwinds, right? Is the better times yet to come with whatever that's happening, right? So with the product that they're actually serving and the market that they're serving, with the clients that they have, they got a good relationship, right, with Google, from Google Glass, and obviously from the non-iOS phone plays. Automotive at the moment is just Jaguar and Mercedes. I need to dig in more into their client base, but this is my thesis. I mean, the thesis is that they'll be growing. Market share is already insane. They're very cheap, um, cheap value play. So yeah, they are poised to grow, and I think They might be slow because revenue growth here on out from 2022 might not be 75% anymore. They got beaten down in 2020. But yeah, I would expect double digits growth for sure, right? For sure. And they gave guidance. We can dedicate just a live on Himax itself, right? So yeah, this is the play. I've done my thesis. I haven't done it in depth, like similar to SoFi and Tesla, but yeah, I like what I'm seeing. Yeah. So let me know, guys. Let me know what you think about this company. Do not follow me to buy this company. Let me know. Are you guys investing in semiconductor? What do you guys think about 2022? Leave it in the comments, and I'll see you next week. Right? I'll see you guys next week. Thank you, guys. Bye bye.